हेलो, गुड आफ्टरनून बैक। कैसे हो आप लोग? मनोज सर है हमारे साथ जुड़ गए हैं। ही विल बी गाइडिंग अस नेक्स्ट पार्ट टू आज का। तो मनोज सर, अप टू यू नाउ।
Okay, sir. Yes, friends, welcome back. Thank you, Rishikesh, sir. Where is that live? Yes, friends. So now let's do the next sum. Okay. I think you had tried. Let's check what you had did. First, let's read the question number 3 of goodwill valuation, which is going on, right? The following is the balance sheet of yellow and green as at 31st December 2016. Okay. Trade payable, capital yellow green, cassette bank, and sundry assets. Okay. The partners shared profit and loss in the ratio 3:2. On the above date, block was admitted. Okay, it's an yellow and green, or black. Sorry, not block. Black are admitted as a partner on the condition that he would be paid 20,000 on capital, and goodwill was to be valued at 3-year purchase of the average 4-year profit, which were, means he will bring 20,000 as capital, right? And goodwill will be valued 4-year average profit, right? 3-year purchase of average profit of 4 year, means 3 years is the purchasing year, that is step 6, and 4 year is the average profit. Okay. The new profit sharing ratio is 6:5:5. This means new profit sharing ratio they had given us. Give journal entries and balance sheet if goodwill is adjusted through partners capital account. देखो friends, here goodwill is adjusted through partners capital account. They are clearly mentioned. It means we will not open goodwill account. We had make the working note, for the treatment of goodwill. That type of treatment we need to do, right? So what they had asked, give journal entries and balance sheet if goodwill is adjusted through partners capital account. Means now they had asked for admission procedure also. So we had discussed admission part, that is evaluation. Second is new PSR. Third is goodwill. But we also discuss how to solve the problem, right? So now come to the next point, admission of partnership, where you should write how to solve the problem of admission of partner, right? You say, sir, what we are doing till now? We are doing till now the part of admission, that is goodwill valuation is one part of the admission. Finding of new PSR is a part of admission. Revaluation is a part of admission. Now we are doing proper or full admission portion. Whether we are in valuation or in goodwill treatment, but still the treatment is start for admission of partners, right? So how to do the treatment of partnership? So for that we have to prepare one revaluation account, second capital account, partner capital account, that may be fixed or variable according to question information we'll make. If question is silent, we consider it's the not fixed, right? And then 3, that is last, balance sheet. बराबर. So now we have to start problem with these three things, and at the end balance sheet must be done. We'll include all data whatever given in the question, right? So now how to solve the problem? So we write, we have to prepare following three ledger. First, revaluation account, which we had discussed. It is just like a profit and loss, where profit is credit side, loss is debit side. Profit when assets get increased, liability get decreased. Loss when assets get decreased and liability get increased. That is called loss, right? Second, revaluation account. After that, we'll make partner capital account, and then balance sheet after admission. Right? Now revaluation we had already discussed, no problem at all. Partners capital account we had already discussed in the introduction of partnership, and how to prepare partners capital account. It is fixed or variable, so accordingly we can prepare. And last, balance sheet, which is just like a T form as we prepare in the final account of professional concern. In the same way we have to prepare the balance sheet also. Okay, and between that, whatever goodwill treatment, whatever new PC, whatever new PSR, all these things we calculate. Okay, so let's start. So answer to question number, we start with question number 3, 8.39. Okay, 8.39. Let's do the sum, whatever we had discussed, right? So now what we have to do, they ask journal entry and balance sheet, but for that we prepare revaluation account. I think there is no revaluation. They had not mentioned anything about revaluation, so no need to prepare revaluation account. We prepare partners capital account and treatment of goodwill, right? So first we make working note, calculation of goodwill and its treatment. Okay, so now goodwill, step 1, average profit of all 4 years, that is 9,000, 14,000, 12,000 and 13,000. Profit is not continuing increasing trend, so we take the simple profit, right? So profit average 9,000 plus 14,000 plus 12,000 plus 13,000, right? Divided by 4. How much is average profit? Tell me. 9,000 plus 14,000 plus 12,000 plus 13,000. It comes to 48,000 upon 4. 12,000 is the average profit. Step 2, FMP will be same. Now step 3, 4 and 5 are not required. Do you know why? Because super profit method is not there. Only average profit method is there. So now directly step number 6, number of purchasing year. Because once we use the super profit method, then only we need the capital employed, then only we need the normal profit. But we are using the average profit method. As the question is mentioned clearly, we want to use the average profit method by using 3-year purchasing method. Right, to 3 years. Therefore, step 7, that is goodwill, equal to average profit multiplied by number of purchasing year. Average profit means FMP, that is 12,000. Number of purchasing year is 3. So, it comes to 36,000. Right? So, in short, 36,000 is our goodwill, which we had calculated first. Now, treatment of goodwill. So make the working note. How? What the partner name? Yellow, green, and black. Yellow is old partner, green is also old partner, and black is new partner. Right? What we have to do first? We have to goodwill raise. That is 36,000 in the old PSR. What is the old PSR? 3:2. Right? So 3:2. We will first credit goodwill. That is called goodwill raise. So 36,000 divided by 5. 7,200 into 3. 21,600 into 2. 14,400. And last one will not get anything. Now goodwill written off. Same amount will be written off with the new ratio, and they had given new ratio also, that is 6:5. 6:5. So 36,000 divided by 16 into 6, 13,500. This is debit, right? Into 5, 11,250. And into 5, 11,250. Therefore, net effect 21,600 credit, 13,500 debit. That means credit is more, so net amount is credit. How much? 21,600 minus 13,500. 8,100 is the net amount. 14,400 minus 11,250. 3,150 is the net amount, and 11,250. This is credit, and this is debit only because there is no credit. So therefore, adjusted entry will be yellow. Capital to credit होगा, right? So black capital account debit. Black capital account debit to yellow capital account 11,250, 8,100, and to green capital account 3,150. Right? So this is the adjustment or being adjustment for goodwill. Being adjusted entry for goodwill through capital account. Right? Now we can also pass the entry for capital he bringing. So you can write bank account debit to capital. He brings some 20,000, right? So 20 cash is arise in the books or in the business. So cash bank account debit to capital account, right? So I think these are only two transaction entry we need to pass that we had complete, right? Now what we have to do, we have to just make the partner's capital account and balance sheet, right? Because these two entries is required for the new partner entry, right? You can write the narration also go there, ask the specific entry. So being capital brought by new partner. What is the new partner name? Blank. Okay. Now capital account. Each capital account is fixed or variable. That is not fixed. So it's not fixed, right? How to identify? It is identified on the basis of your information. You can see if capital account is not fixed, then they give us the current account balance. They had not given the current account balance. That means capital account is fixed, right? Yellow, green, black, particular, yellow, green, and black. Right? First, by balance brought down. Balance brought down is only in existing partner, that is yellow and green, 25,000 and 20,000. 25,000 and 20,000. Now, what are these effect we have to provide? That is for goodwill, black capital debit. So in debit side we write to yellow capital and to green capital. Right? Write in the black amount how much? 8,100 in yellow and 3,150 in green. And here we write by black capital account 8100 in yellow, 3150 in black. So you can see this entry effect in capital account only, but in black capital it is debit 11,250, which is yellow and green, yellow 8,100 and green to 3150. And in yellow and green it's a credit side, but by using black name, that is entire amount 11,250 and bifurcated is 8,111 in yellow and 3,150 in green. Okay. Now next further capital we had introduced, so that capital is received. So in capital account is a credit side. Capital of whom? This is black capital, right? So we can write black name. By bank in the black capital 20,000. Right? Nothing other than this transaction. So what we can do, we can find the balance, carry down. Just calculate the balance, whatever balance remain, because it's a proper admission question, whether it is given with the goodwill, but goodwill required in the case of admission, retirement, death only. Right? So how much? 20,000, 23,150, 33,100. Balance 33,100 only. These are 22,150. Same amount. And here is 20,000, but there is debit also. So it will reduce by 11,250. So it comes to 8,750. Right? So now this is capital account, but they had asked balance sheet also. So we make balance sheet after black admission. Right? Balance sheet we have to prepare in the same format which is given in the question. Just whatever addition we had made, we have to put that addition information. That is nothing but these two entry only. One is capital account, which is adjusted through capital, and bank account is extra, otherwise everything is adjusted through capital. Right? Because capital account already we had prepared. So now tell me the balance sheet item. What is the existing balance sheet item? It is saying that cash at bank 10,000, where we include 20,000 more, so become 30,000. Sundry assets 55,000 remains same. So cash at bank 10,000 existing plus 20,000 from this entry, that is 30,000. How get 20,000 in this entry? You can see bank account debit to capital. So the 20,000 increase in the capital in the cash account. So we had not make the cash account, but we can make directly here, right? Then other assets. So that is 50,000. You can see sundry assets also. Right? Then capital yellow, green, black. From the capital account you can write 33,100, 22,150 and 8,750. Right? This is 11,250 will reduce, so 8,750 will be the net amount. So you can calculate the total 33,100 plus 22,150 plus 8,750. 64,000 is the capital account balance, right? Now, what we do remaining? Remaining is whatever other assets given, that is trade payable 20,000, right? Trade payable 20,000. That's all. You can check once. Anything remain, like capital account we had complete, right? These two entry we had already included, because in capital account we had included this first entry entire and second entry capital of blank. In cash account we had separately added in the cash bank, right? So everything is done. You can take the total. Total must be tally. It's 84,000. There should be also 84,000. It's 85. C 55 10 is 25 and 20. It's 25 and 20 and 8 33. Take the total corporate funds 25,000 plus 8,100. 33,100. This is 23,150. Oh, ये 23,150 है. We had taken 22. Okay, so 23 का use. So become 65. Then this is also 85. Right? This actually balance 23,150 we should transfer here, but we have transfer only 22,150. So it is 23,150. Obvious, if we not transfer the same amount, our balance sheet will not tally. Okay, understood. So this is what? Admission. So admission, that question which can arise, proper question also we can solve. We have to make three accounts, that is revaluation, partners capital account and balance sheet. That is after admission, what is the balance sheet position, right? And goodwill treatment and finding of new ratio is a part of this part, right? So which is basic part of this. Now, next question. Third question is complete. Their balance sheet also 85,000, 65,000 is the capital, 33,150, 23,150 and 8,750, right? Illustration 4, pieces of information. Illustration 3, let you give journal entries and prepare balance sheet, assuming that goodwill is bought in cash. Okay. Now they say goodwill is bought in cash, that means what? He will bring cash. So in that case, what we should do? Bank account debit to yellow capital and to green capital. How much amount he will bring? His share. What is his share? 11,250, right? So I just pass only one entry for this case. Answer to question number 4. If black bringing for goodwill in cash, how much is goodwill amount? 36,000, right? What is the goodwill amount? Yes, 36,000 goodwill amount we had calculated. So out of that, how much is the black share? So black share is new profit sharing ratio, that is 5/16. You can check new PSR 5/16. You can see here also, you can see there also, right? And though don't see the solution because their solution is very complicated, but question is excellent. So we have to use that question because the question is give us in the exam, and solution we have to make as per our own concept, right? So 36,000 into 5 divided by 16, it comes to 11,250. It's a share of black, new partner. So he will bring in cash. So what entry he pass? Bank account debit to yellow capital and to green capital. Now bank account debit 20,000 to black capital is separate entry. We are not mixing it with this adjustment entry, right? So we are considering only for goodwill part. That 11,250 he bring. Now how yellow and green distributed among each other? So they should distribute it among sacrificing ratio. Okay. So we have to calculate sacrificing ratio. You know how to calculate sacrificing ratio? I had explained you new ratio equal to old ratio minus sacrificing ratio. Remember? Now, if you want to use sacrificing ratio, then how it's come? Old ratio minus new ratio. Yes or no? Because sacrificing ratio is just shifted to the new ratio is shifted to the sacrificing ratio. So sacrificing ratio equal to old ratio minus new ratio. Now we have old ratio in the question. We have to come on the next 3 question only, because it's depend on question 3. New ratio is given 6.5 and old ratio is 3:2, right? So what we should write? Old ratio 3/5 minus new ratio is 6/16. Very good. So now we solve this. 16 into 3. 16 into 3, how much? 48 minus 30 upon 16 into 5. 80, right? So what is the ratio? 18/80. This is for A, or you can say yellow sacrifice. Then green sacrifice 2/5 minus 5/16. So upon side 80 only. 32 minus 25, it comes to 7/80. Now this is sacrificing ratio, so we take only the ratio, that is 18:7. So sacrificing 18:7, that means 11,250 into 18/25. Same 11,250 into 7/25. Why 25? Because 18 plus 7 is 25, right? So it comes to 11,250 into 18 divided by 25. 8,100, and this comes to into 7, 3,150. So the amount will be same, which we had already used through capital adjustment. But through capital adjustment is different treatment, and when we bring in the cash, then different treatment. But answer will be the same. So 11,250 we have to distribute in the sacrificing ratio, and sacrificing ratio is calculated like this, that is new ratio equal to old ratio minus sacrificing ratio, and sacrificing ratio, therefore sacrificing ratio equal to old ratio minus new ratio. So you get the sacrificing ratio, and sacrificing ratio you distribute the 11,250 which you receive as goodwill from the new partner, which is distributed among old partner in their sacrificing ratio. Okay, so I hope it's clear, all of you. Perfect. So now this question is also done. Other than all transactions are same, only that goodwill entity we have to pass bank account debit to yellow capital to green capital. Otherwise, all treatment are same, right? They had passed one entry for that also, and balance sheet also they had made. You can also make the balance sheet. In balance sheet, now your 11,250 also increased by cash, and capital will not reduce by that much amount, right? So the amount will be same. Continue with the same illustration 3. Let us give journal entry and prepare balance sheet, assuming that goodwill is bought in cash but withdrawn. Yes. Now, friends, if goodwill is bringing in cash, this is answer to question number 5. If goodwill is bringing in cash and it's withdrawn. So now withdraw is one more word. Now friends, tell me your capital, whatever amount you want to withdraw, what entry you pass for that? Just simply enter that capital account debit to cash bank. So what they want to say, whatever goodwill they get, means the goodwill we get from the new partner, that is the amount. Bank account debit 11,250, yellow get 8,100 and green get 3,150. What they want to withdraw that amount. So if they withdraw the amount, we just pass the opposite entry, or like a drawing of the entry. So what entry we can pass? So we can write first entry are same as question 4, right? But in addition, क्या बेटा? Come here. What's happened? Teacher scold you? Huh? Not studying?
That was another video.
Another video? So you should see that another video. No, no one is going for you.
Now tomorrow she will take.
Tomorrow she will take, na? So you see video fast, where the video, and ask your teacher where the video we can see.
I have been. Teacher said call fastly, fastly.
Fastly, but you had asked that where the video I can find.
But teacher tell fastly. I was
That's
telling that. I was telling.
Okay, no problem. You asked in the group. Anyone can share the video where the video I want to watch. Okay, you will share it. Okay, you ask in the group. Sorry, friends. Now, same as question 4. So first entry will be same as question 4. That is bank account debit to yellow capital to green capital. Now he withdraw. That means drawing. Something like a withdraw of capital. So for withdraw of capital, or goodwill, general entry will be same. That is yellow capital account debit, green capital account debit to cash bank 8,100 and 3,150. The same amount which they are getting. They withdraw it. Why they withdraw? Because they want to bring that cash in their home. Okay, they can get it. Entire amount is 11,250. So if they withdraw, then we have to pass this more entry. Then no problem. Then we can make the balance sheet again. How to make the balance sheet? Same as above. Only difference is what? Capital account will change. Cash will change. Remaining thing is same. Right? So you can make again capital account if you want. Then you can make the balance sheet. Right? So I just make balance sheet in this case. Illustration number 5. Okay. In illustration number 4, you make the balance sheet. Right? So first we have to prepare a capital account for that. So capital account for illustration 5 I am doing. Okay. By balance brought down. How much is the balance brought down? The same amount which we have previously. That is 25,000 and 20,000. Right? 25,000 and 20,000. Right? Now by bank, he bring 20,000 for them. That is black. And these two guys which receive part of goodwill 8100 and 3150. That is for receiving the goodwill. Now he withdraw. So for withdraw, we'll pass further to withdraw / bank 8100 yellow had withdraw and 3150 black had withdraw. Right? Now to balance, carry down. 25,000 remains same, 20,000 remains same because he withdraw the same amount which he had received from the black, right? And black also 20,000. So now this is the capital. We make the simple balance sheet where cash and bank have no change. It remains same as it is because cash account are same as whatever cash taken by bringing by the old partner, new partner for goodwill, they had withdrawn. But capital account given by the old partner, new partner will be added, right? So 10,000 plus 20,000, right? So 10,000 plus capital amount of black, but not goodwill amount because goodwill amount whatever they receive they withdraw. So no amount has been remain in the balance sheet of the company, right? So now cash bank. Then what? Other sundry assets 55,000. Then whatever the remaining, trade payable 20,000. First we write capital, yellow, green, black. 25, 20, 20. 65,000. Okay. Now payable, trade payable, here 20,000. That's all. Take the total. 85,000. This side, yes. This side also 85,000. Understood? So whatever extra entry we have to pass, accordingly our balance sheet will be affected. So this is the balance sheet in case of file illustration. Right? Go ahead. Entry are same, means balance sheet are same for illustration 3, 4, 5. Next. Illustration 6. On the basis of information given in illustration 3, let give journal entry and prepare balance sheet assuming that goodwill is paid privately. Once the goodwill is paid privately, then also treatment are same like a withdrawal of capital. Means they had withdrawn, right? So if it is paid privately, that means black has paid 8,100 to yellow and 3,150 to green without any entry in the books. Then also our balance sheet, everything remains same, right? So you can see answer, that is bank account debit to black capital only, then they have to pass the entry. They will not think about the this goodwill part because that is privately paid. So no entry will come for goodwill received and goodwill paid or goodwill, right? Balance sheet will be the same, 85,000, 85,000. You can see the each amount that will be same because privately means black has paid yellow and green whatever amount they require, but not keep in the record in the books, which is officially not allowed. Actually, we should not do this like this thing. But still, if they do this, that means that goodwill entry will not come in the picture at all because they do it in private, right? You have to make such type of note. There will be no entry for goodwill, but black will pay to the yellow 8,100 and green 3,150 privately, and no entry in the books, right? Like this, you have to make the note. Now, account treatment in case of change in profit sharing ratio. Friends, sometimes it may be possible that there are no admission, no retirement, but still they are changing some contract between them, like they changing their profit sharing ratio. So if they're changing their profit sharing ratio, then also one partner gain, another partner sacrifice, because some partner will gain, some partner will sacrifice. So we have to record that also, that whoever sacrifice will be subtract, who will receive will be added, right? So we write a small note on this. Treatment if profit sharing ratio are changed. And friends, also remember, it is called profit sharing ratio, means profit and loss sharing ratio. Loss and then also it is share, except in case of minority partner. If there is minority partner, then he will not share the loss part. Otherwise, everyone share profit and loss, right? So treatment of profit and sharing ratio are changed, right? Treatment if profit sharing ratio are changed. Then we are writing in this case, one partner will gaining partner and some other will sacrifice. So what we have to do? Whoever gaining partner will be, tell me, will be received. Will be paid for goodwill to sacrificing partner, right? So लिखेंगे the treatment are same as in case of admission, but here gaining partner is treated like new partner because he have to pay for goodwill to sacrificing partner. Therefore, treatment of goodwill equal to gaining partner capital account debit right to sacrificing partner capital account, because sacrificing partner will receive something from the gaining partner. Okay, now this is the treatment for when new partner arrives. Is it clear? Not new partner, when profit sharing ratio are changed, right? So in the case of ratio are changed, then the treatment is this. ABC are equal partner. They want to change the profit sharing ratio 4:3:2. Make the necessary journal entry if goodwill of the firm is valued at 90,000. So what we have to do? Raise capital with the old capital, old PSR. Write off capital with the new PSR. What is the difference? You pass the entry for that. Like we do adjustment through capital. Right? So in the same way we do, first they have old ratio, they are equally. Now the new ratio they have 4:3:2. Right? And profit is 90,000. So let's do answer to 6. What the page number? Sorry, not 6, 7. And page number is 8.42. Seven, 8.4. What we do? We just write the answer. What? Goodwill will be adjusted through partner capital. That is, gaining partner will pay to sacrificing partner. That is, gaining partner will be paid / debited to sacrificing partner, that is credited. Right? How? So we make the same working note. You can name the also working note. The statement showing adjustment for goodwill. Right? We have to make 3 columns as there are 3 partners. What the partner name? ABC. Right? ABC. Goodwill raised. How to goodwill raised? 90,000 in equally divided by 3. So 30,000 in all case. Right? It is called credit. 8. Hello. Haji? Can you hear me? Okay. कभी किया था आपने पेमेंट? 28, अच्छा 28 September. Okay. Share the detail with me. Today we'll send. Yeah. On this number only, okay? We'll send you today, don't worry. Okay, so this is credited, right? Now, goodwill write-off. Write-off means on the new ratio. It is debited. What the new ratio? 4:3:2. So 90,000 divided by 9 become 10,000. So it's become 40,000, 30,000, and 20,000. Therefore, net debit 40, credit 30. That means 10,000 is the debit. 30 is 0. 30 that is 10,000 credit. Means C are sacrificing, A is gaining, and B is neither gaining nor sacrificing, right? So what NTB pass? A capital account debit to C capital account by rupees 10,000. It means gaining partner will pay to sacrificing partner. So A is gaining, so he will pay 10,000 to sacrificing partner C. It is paid by cash or it is paid by through capital. So we have debited A capital and credited C capital. Is it clear? So what we are doing? We are just treatment of goodwill for change in the ratio. Because of change, some partner gaining, some partner sacrificing. So we have to include that gaining or sacrificing. Okay, done. Next. ABCR partner sharing profit and loss ratio in the ratio 4:3:3. They decided to change their profit and loss ratio 776. First they have 433, now they have 776. Goodwill is of the firm is value 20,000. Calculate the sacrificing gain by the partner and make the necessary journal entry. So same जैसा भी किया है same का same ही है friends. Here first we have the equal ratio, then we have divided into new ratio 4:3:2. But now we have the existing ratio 433 and new ratio is 776. So you can see 433. That means this 4 is sacrificing to B, means A is sacrificing to B, because new ratio B is higher compared to old ratio and A is less compared to new ratio, compared to old ratio, because before 4:3:3, but now 776. I'm just saying this on the oral basis, but you have to do like this we had to, right? So you do in the same way like we had did just before. Okay, let's go ahead. AP and C and D are partner sharing profit ratio equally. They manually agree to change their profit sharing ratio 3:3:2 to give journal entries. So the same way we can give, but here there is no goodwill amount, so we can write only assuming part, or maybe we just debit or credited the amount, means name only, not write the amount. They should give the amount. I think they assume the goodwill amount is 20,000. Okay. Now in case of retirement and death, goodwill treatment. So in case of retirement and death, goodwill treatment, again same, sacrificing partner will receive from gaining partner. So in case of retirement death, what's happened? The retired partner will get something from the remaining partner, right? But detail we will discuss when do the retirement. Now we come to the admission chapter, so that admission sum we do, then we come to the retirement, and retirement time we will discuss that treatment of the goodwill also. And the simple treatment is gaining partner will have to pay to sacrificing partner. In case of retirement, retiring partner is sacrificing because now he will not more in the business and he will not get anything from the business. So he will receive the amount for goodwill from the remaining partner, which is continue with the firm. Okay, so now come to the next chapter, admission of partner. So that admission of partner, we do the 1 or 2 sum in the proper way. So you understood the proper process where evaluation account also used. And we also use one special ratio that is called adjusted capital. Okay, so that part also we will discuss, but first we do 1 or 2 sum of this admission only, then we go on that part, right? So do the illustration number 1. It's a good sum where cover maximum thing. For admission, what we have to do, we have to prepare 3 accounts, that is revaluation account, partners capital account, and balance sheet. We prepare all account together so that whatever information required we put the immediately, and we do complete the sum in one step only, in one part only, right? The following is the balance sheet of Ram and Mohan, okay, who share profit and loss to 2:2. Done. On 1st January 2016, their position are trade payable, Ram capital, Mohan capital, building, plant and machinery, inventories, trade receivable, and bank. Okay. Now what they say? On this date, Syam was admitted on the following. Okay. He is to pay 25,000 of his capital and 10,000 for his share of goodwill for 1/5 share in profit. Okay. So they had given cash share for the goodwill, right? Then the new profit sharing ratio will be 5:3:2. New profit ratio also given. The assets and liabilities are valued at agenda. Building is 25,000 and previous it is 18,000 only. Plant and machinery 12,000, previous it is 15,000. Inventory 12,000, previous it is 12,000 only. So what they are doing? They are just giving the information about the valuation part. So we'll put these information in the evaluation part, right? Trade receivable because of doubtful debt, 9,500. Okay. It was found that there was a liability for 1,500 for goods received but not recorded in books. This is something rectification of error. Means we forget to record 1,500 goods liabilities. So what we do? We just create that liability either directly or through valuation account, right? So other effect will be in P&L account definitely, because when liabilities arise for which we not getting anything, so that is our loss, right? So we do that do through valuation account. It is better, right? Give general entry to record the above. Also give balance sheet of the partnership firm after Syam admission. Perfect. So they had asked general entry. But as I suggested from the beginning, if we pass journal entry, then we can make the ledger. If we make the ledger, then we pass the journal entry. We can pass the journal entry. So we had learned that the valuation account, partners capital account, and balance sheet we have to prepare. So journal entry will pass as a working note, or maybe after these account. Whether we prepare directly or whether we prepare on the basis of these account. Okay. So let's start. Answer to question number 1. What is the page number? 8.53. Okay. How to do? We just write partners revaluation account Then partner capital account. Here partner's capital account is fixed or variable. So if current account is not given, it is considered it's variable, that is not fixed. How many partner? Ram and Mohan, only 2 partner are there. Make only 2. Ram and Mohan. Particular. First of all, by balance brought down, we can transfer the balance 20,000, 25,000. Sorry, the admission is also takes place now. So one partner also come, Shyam. So we have to make 3 column only. Existing there are 2 partners, one more partner will arise. Name is Shyam. So Ram, Mohan and Shyam. Ram, Mohan and Shyam. Okay. By balance brought down, how much balance? Ram and capital, Mohan capital 20,000 and 25,000. Now, by bank, he received something. Now we make balance sheet after admission. Okay. Make later, just make the format only. Trade payable, no, he pay 25,000 is capital and 10,000 for his share of goodwill, right? So what we write? We can pass the entry. Bank account debit to Shyam capital account to Ram capital account to Mohan capital account. How much he bring? 25,000 and 10,000, 35,000. Out of that, 25,000 for Shyam capital and 10,000 Ram and Mohan will be distributed in their sacrificing ratio. So, sacrificing ratio old ratio minus new ratio, right? For Ram, how much is the old ratio? Old ratio is 3/5. New ratio is 5/5. So 3/5 upon 5/5, right? 15. 5/5, no? It's a 5/10. Right now? Because new ratio is 5:3:2. It comes to 5/10. So it's 30 minus 25 upon 50. It comes to 5/50. Then Mohan, not Shyam. Mohan is doing something. Three upon 10, and previously his ratio is 2/5. 2/5 minus 3/10. So 50, 20 minus 15, 5/50. Therefore, sacrificing ratio 5:5 means equal. So 10,000 will be distributed among both, 5,000, 5,000. Right? So this is the first entry for introduction or admission of the partner. So what we write? Bank. In bank we write 5,000 in Ram, 5,000 in Syam, and 20,000 in 5,000 in Mohan and 20,000 in Syam. Right? Okay. $25, friends. In Syam, it's 25,000. Okay. The new profit ratio is done. The assets evaluation. Building 25, plant machinery 12. So whatever increase will be right in credit side in the revaluation account. Right? By building 18,000, it's become 25,000 from 18,000, 7,000. Right? Next, plant and machinery. These are, I think, reduced. So debit side. 12,000 only value 15,000. So plant and machinery is the debit side because it's a loss. Plant and machinery. How much? It's 15,000 existing, but now 12,000 only. So 3,000 is the loss. Right? Okay. Then go ahead further. Inventories 12,000, 12,000, no change. Trade receivable 9,500, but here 10,000. So trade receivable also loss. 2. Trade receivable 500. Right? And also remember these items we should write in the balance sheet as well so that we will not have any mistake. So write all these items in balance sheet immediately. Write the balance sheet. It's balance sheet only. Building 25,000. Plant and machinery 12,000. Inventory भी 12,000. Trade receivable. Trade receivable age. Tell me. 9,500, right? Let's check. Building 25,000, plant and machinery 12,000, inventory 12,000, and trade receivable 9,500. Okay. Then it was found that the liability of 1,500 to be goods receivable not recorded in the books. So what we should do? That is the loss, right? So unrecorded liabilities 1,500. This is a part of evaluation we want to make. We can make unrecorded liabilities 1,500. Okay. Anything else? That's all. So now unrecorded liability also recorded. Now whatever each remaining thing we should put so that we could complete the transaction like we had did in the final account also when we make the trading and P&L account from the trial balance. So after all adjustment we check the trial balance item, right? So bank is 5,000, out of that 25 and 10 and 35,000 added. So we can write bank already is there. $5,000 plus 35. Right now, so 40,000 the bank balance. Then anything else? Trade payable 15,000. Trade payable 15,000. Then capital balance we will calculate. So now let's close. Right? All balance sheet item also we had checked. Everything is done. revaluation account also done. Now first close that revaluation part. $7,000. For the balancing figure, 2,000 to partner capital account given to old partner and old PSR. Old partner name is Ram and Mohan. Right? What is the Ram and Mohan ratio? 3:2. 2,000 divided by 5. 1,200, 800. This is given to partners capital by revaluation profit 1,200, 800. Right? Then close partners capital account to balance brought carry down. How much? Take the total 26,200. Then 30,800. And then this is 25,000, nothing extra. Perfect. So this is we have to write in the balance sheet capital Ram, Mohan and Sam. 26,200, 30,800, 25,000. $72,000 the capital. Now take the total of this balance sheet. It must be tally 1,500 plus 15,000, 88,500. This side 25,000 plus 12,000 plus 12,000 plus 9,500 plus 40,000. 98,500. This should also 98,500, friends. 26,200, 25, 30, 30,800 and 25,000, right? So 26,200, 30,200 and 25,000. 26,200 plus 30,200 plus 25,000. Yes. This total is wrong. 26,200 plus 30,800 plus 25,000. It's 82,000, not 72,000. 82 plus 1,500 plus 15, 98,500. Okay, so this is a full frame sum of the admission which you can solve, where we had make revaluation account, partners capital account, and balance sheet. Now for this thing you can pass journal entry as well. For journal entry mainly you need to pass for revaluation part. That is revaluation, you can pass the entry building account debit to revaluation. Right here all these revaluation account debit to all these name. So this is become your entry for evaluation. For partners capital account we had already passed the entry, right? And balance sheet no need to pass the entry. So if you want we can pass the entry also. You had asked the general entry, that's why I am trying to pass. Number 1. Number 2 for evaluation, building account debit to revaluation account. How much building? 7,000 building get increased. Then next, revaluation account debit. Revaluation account debit to all name, whatever name is given in the question. This is a plant and machinery. Inventory is no change. Stock no. Debtors, right? So whatever we had debited, all the account is credit. Revaluation account debit. Plant machinery 3,000. Trade receivable भी हैं 500. फिर एक unrecorded liability. Then to trade receivable, right? Trade receivable is debtors only, so indirectly हो गया है. What the name just mentioned, because this is the ledger. If we making the entry from ledger, so this account is debit, this account is credit. So plant machinery credit, trade receivable 500 के credit. This is 3,000 plant and machinery, and this is 1,500. This is what actually one liability which is not recorded, unrecorded liability. Okay, this comes to 5,000. Then whatever profit and loss will be transferred to partners capital account. So revaluation account debit to partner capital account. To partners capital account. How much profit they had earned on the valuation? 2,000 profit, that is distributed 1,200 and 800. So 2,000, 1,200 and 800 being the valuation profit and loss distributed to partner in existing ratio. Okay, bus done. Because for balance sheet there is no entry and there is no adjustment which we require to change. Everything is correct. So now this is admission of partners. You can also check, answer whatever they had given. Profit on evaluation is 2,000, 1,200, 800, right? And balance sheet 98,500, where 82,000 capital, 6,500 goodwill, trade payable, building 25, trade payable 12,000, inventory 9,500, and bank 40,000. Okay, friends. So I hope that revaluation part get over and admission of partners also part get over. Clear? Now we'll take around 15-minute break. Okay, then we're gonna start. Till that, you do next question. You try your own. Okay. Do. Yes, friends, welcome back. Now make the heading proportionate capital. Okay. Proportionate capital slash capital proportionate slash capital in their profit sharing ratio. It's a new heading, huh? Proportionate capital, capital proportionate, or capital in new profit sharing ratio, right? Friends, this is something partner want to keep their capital as per their profit and loss ratio. I repeat, partner want to make their capital as per their profit sharing ratio. So this is called proportionate capital. So how it will do or how it will work? So what we have to do, they give us some base like, for example, A and B and C. Three देते हैं, okay? A, B, C. Are partners sharing in 3:2:2. Now they admit D as new partner. 4:1:6 share, right? And he bring 1 lakh for each capital. So what is this? 1 lakh each capital for 1/6 share. So if they want to make proportionate their capital, what should do? What should they do? 1 lakh is equal to 1.6. Therefore, how much total? Total is 6 lakh. Right? 1 lakh is equal to 1.6. Then total is 6 lakh. Now this 6 lakh we divide into profit sharing ratio. New PSR between A, B, C, and D. So this is called adjusted capital. For that, what we should do? We'll make partner capital balance carry down first from that adjusted capital, and then first we make partner's capital account in this adjusted capital, and then we'll find the balancing figure that either we transfer to current account or maybe transfer to cashback account. Means they withdraw their capital or they maybe further introduce the capital. Okay, I repeat once again. Proportionate capital, or you can say capital proportion, means where partner want their profit sharing ratio in the same as their capital, or you can say their capital want to same in the profit sharing ratio. Means their capital ratio and profit sharing ratio are same. They want to make both are same. So how to do this? For that they give us some base like D bringing 1 lakh for 1/6 share. So we can calculate total share is 6 lakh. Then total share will divide into A, B, C, D equal part. That is called proportionate capital. So once we get the proportionate capital, what we do? Like in this capital account, see the previous capital account. Here suppose they say proportionate capital. We have to make capital our proportionate capital. So how we do? We just write here to balance carry down that proportionate capital here instead of balancing figure, and whatever balancing figure remain will be considered either bank or current account. Okay, so we do one proportionate capital question so that these concepts are clear. Okay, so now let's come to the proportionate capital, where our capital and profit sharing ratio become same, right? So proportionate capital, right, where our capital and PSR ratio will be same, right? Okay, let's do one sum on this basis. And I think one is more, which is related to the memorandum revaluation, right? So let's read the next question. You understood automatically. A and B are partners sharing profit and loss in the ratio 3:2. Okay, their balance sheet as on 31st March 2016 is given below. Trade payable, capital account, freehold premises, plant, furniture, other equipment, investment, inventory, trade receiver, and bank. Okay. On 1/4/2016, they admit C on the following terms. Okay. C will bring 50,000 as capital and 10,000 as goodwill for 1/5 share. Same. Provision for doubtful debts to be made on trade receivable is 2%. Okay. Inventory is written down by 10%. Okay. These are evaluation. Freehold premises is to be revalued 2,40,000, plant 35,000, furniture 25,000, and office equipment 27,500. They also same. Partners agreed that the value of the assets and liabilities remain the same, and as such, there should not be only change in their book value as a result of the above mentioned adjustment. So this is the main point, which is called memorandum revaluation account, which we had discussed previously also. That memorandum revaluation account is what? They want to maintain their accounts, or they want to maintain their books in the same, whatever their original value. Means in the book value, they remain after addition also. Then question, how to revalue? So first we revalue, then again we revalue, then we reverse that revaluation. First we revalue like normal solve question, then we reverse it opposite of the revaluation, and then we get what? The amount which is distributed in new PSR. Right? So it's a memorandum revaluation case. You are required to make necessary adjustment in the capital account of the partners and so balance sheet of the new firm. So no problem. Let's start. So it's a case of memorandum capital account. Right? It's a question number 2, page 8.54. Answer to question number 2, 8.5. Okay. So first, what you do? It's a case of memorandum revaluation account, right? So we make revaluation as well as memorandum revaluation, or we can say we directly prepare memorandum revaluation account in two parts. First part is revaluation, then second part just opposite of this, memorandum revaluation. So one thing, they like we prepare trading P&L account in same account, in this they prepare here also, right? Then partners capital account, free capital, then balance sheet after admission. In this case, balance sheet remains same, because all assets liabilities say that remains same except cash bank, right? So let's make, I hope आपने भी बनाई होगी इसको. Okay, I just now. Yes. Now do. So first, whatever the question, we just put the information first, right? So capital balance 2 lakh and 1 lakh, A or B. A, B and C. Buy balance brought down 2 lakh, 1 lakh, right? Then C will bring 50,000 capital and 10,000 for goodwill, for beneficiary, right? So what we write to bank, 10,000, 50,000 for capital and 10,000 for goodwill will be sacrificing, will be used in the both partner in the sacrificing ratio, which is, what is the new ratio? They have given the new ratio. I think they have not given the new ratio. We have to calculate. 3:2 is the old ratio, and new ratio will be, we have to calculate. Okay, for new ratio is not given anywhere. Fine. So calculate the new ratio. Working note. Calculation of new ratio, right? How to calculate new ratio? So that we have already discussed. Total share is 1. Therefore, C share is 1/5. So balance share equal to 1 minus 1/5 equal to 4/5, right? Therefore, A will get 4/5 upon 3/5 and B will get 4/5 upon 2/5. 25 upon 12, 25 upon 8, right? And C is 1/5 into 5/5, so 5 upon 25. 12:8:5 is the new ratio. Okay, but in this case, sacrificing ratio will be same as old, because we assume that old partner has sacrificed in their profit sharing ratio. Okay, that is our assumption. So what we do, we just distribute the 10,000 among these in 3:2, because our profit sharing ratio, old profit sharing ratio is 3:2, right? So now this 10,000 we will distribute in this ratio, that is 6,000 and 4,000. So this overall 60,000 entry we had passed, right? So 60,000 that is they had received. So 6,000 cash will increase, right? For new balance sheet. So we can write the balance sheet cash 10,000 plus 60,000 bank, 10,000 existing plus 60,000 C has bringing, so 70,000 overall cash will be there, right? Okay. Now provision for doubtful debt made 2%. This is only provision for doubtful debt we made, but it will reverse in future, right? Then inventory written down by 10%. So these are the revaluation part. So we put in the revaluation. 2 bad debts provision, 2% to inventory written off by 10%, right? How? Provision for doubtful debts. So trade receivable is 25,000 on which we charge 2%. Inventory 30,000 on which we charge 10%, right? So 25,000 charge 2%, 30,000, we charge 10%. So it's become 500, it's become 3,000. Right? Okay. Inventory written off. Next, buy freehold premises 2,40,000 and plant 35,000. So plant freehold premises, both I think reach. Freehold premises 240, which is previously 2 lakhs, 40,000, plant 35,000, it's reduced. So it's increased by 40,000 and plant is reduced. So to plant by 5,000, right? Plant reduced by 5,000, fuel property increased by 40,000. Now furniture 25,000, furniture is 30. So furniture increased by 25,000. Office equipment 27,500, it's increased by 2,500. Okay. So to furniture by 5,000 increase. Furniture and office equipment by 2,500, right? So office furniture 5,000, office equipment 2,500. That we had done revaluation part, right? That's all. Now remaining part we keep as it is, and there is no revaluation reserve. Something is there, then we distribute that reserve also. Nothing is there. Now what we do? These are just revaluation part, which is just opposite into memorandum revaluation. Right? So first we calculate this profit. What is the profit? 40, 45, 47,500. So what is the profit? Let's calculate 500 plus 3,000 plus 5,000, 8,000 minus 47,500. So become 39,000, right? So 2, what we write? Partner, capital account, old PSR, right? A and B 3:2. So divided by 5 into 3, 23,400 into 2, 15,600. Is clear? Now this revaluation is opposite. Now it's just opposite of that part. So it becomes memorandum revaluation. So now by we write bad debts, that is debtors part we again increase. By inventory, which is written off, again it increase. By plant, which is reduced by 5,000, it is again increase. Then freehold property, this is again we debited 40,000. Furniture 5,000. Office equipment 2,500. Right? Then by all partner capital account ABC in the new ratio which we had calculated just now, 12,850, right? 12,850. Same amount will come, that is 47,500, 47,500, 8,500, 47,500 minus 8,500, 39,000. 39,000 divided by 25 into 12, 18,750, 8, 12,480 into 5, 7,800. Right? So this is memorandum revaluation. Now partners capital account will transfer both revaluation profit. First revaluation profit is 23,400 and 15,600. Right. To memorandum profit and loss account, memorandum revaluation. ये studio one all three 18,000, 750, 12,480, 7,000. It is something like a goodwill raise, goodwill write-off, right? So we had raised the goodwill at the time we credit the partners capital account, only old partners capital account, and when we write off the goodwill, we debit partners capital account, but all part. Right? So this is done of memorandum part. Now you can calculate the capital balance. Here there is no proportionate capital, right? Balance carry down. Just calculate the balance. 2 lakh 29,400. Right? This is 1,19,600. That's it, 50,000. So 2,29,400 minus 18,750. 2,10,650. 1,19,600 minus 12,480. 1,07,120. Sorry. Where this is 42,000. Now capital, the capital balance A, B, C, 2,10,650, 1,07,120, 42,200. Right? Okay. We go ahead. Now these items remain same. Now the item not changed because they had mentioned that memorandum revaluation be just opposite the revaluation effect. So these items remain the same. So write the same item of remaining balance sheet. That is trade payable 50,000. Trade payable 50,000. Freehold premises 2 lakh. Freehold premises. Plant 40,000. Right, because plant value has reduced by 35, so we again increase. Furniture 20,000, office equipment 25,000. Furniture 20,000. Office equipment 25,000. Inventory is 30,000. Trade civil 25,000. Trade receivable 25,000. And cash we had already done 70,000. Right? Not take the total, it must be tallied. Right? Because whatever information is there for evaluation, we had opposite, we had reversed it. So now evaluation no more. So balance sheet item remains same. Cash only increased by 60,000, which increased, and remaining part affected through capital account. Capital account we are already input here, right? So now we write these item directly. Now, friends, I have one simple doubt that this amount is how much? 18,500 750, 12,480. It's 480. So 10,000, 1,07,120. And this is 480 now, so it should be not 120. 12,480 minus 1,19,600. 1,07,120, right? And I think this distribution is wrong. 39,000 should be something different. This 39,000 we are distributing 12:8:5. No? The total should be 39,000. No? So you take the total 18,750 plus 12,480 plus 7,800. It's not tally. 39,030. It should be same. So what we should do? 39,000 divided by 25 into 12. 720. This is 720, friends. Not 7. Remaining are correct. 12,480. Okay, so this is 20. 720. It's become 80. It's become 80. So this becomes 3,60,000. Because this 30 rupees is showing one odd figure, which is not showing in the asset side. You can cross think. Because basic calculation we can do in our mind, right? So it's become 4,10,000, 360 and 50,000. Now this is 70,000 plus 2 lakh plus 40,000 plus 20,000 plus 25,000 plus 30,000 plus 25,000. 4 lakh. Understood? So this is what balance sheet, where memorandum account we had prepared. I hope no problem. Let's check their answer also. This is memorandum evaluation they had made in the same way that we had made, and this is the balance we got, right? And a loss of evaluation, and they say capital B capital, so that is net 42,500 only, and balance sheet total is 4,10,000. Capital also same. Everything is same, right? Let's do the question number 3. A and B are partners in the firm, sharing profit and loss in the ratio 3:2. Okay. The balance sheet of A and B as on 1/1/2016 was as following. Okay. बैलेंस शीट दिया हुआ है. Liabilities, trade payable, bank overdraft, capital, assets, building, furniture, inventory, trade receivable, less provision, inventory, cash. Okay. She was admitted to the firm on the above date on the following terms. Okay. She is admitted for 1/6 year in the fund in the future profit and introducing a capital of 25,000. Okay, a new profit sharing ratio of ABC will be 3:1. In the previous question, new profit sharing ratio is not given, but this question they had given, right? Now, C is unable to bring the cash for his share of goodwill. Decided to calculate goodwill on the basis of C share in the profit and capital contribution made by him to the firm. This is, friends, something hidden goodwill concept. Okay, so we calculate goodwill through hidden goodwill concept, where we get goodwill by C capital. Okay, like C bringing 25,000 for 1/6 share. So that total share should be 25,000 divided by multiplied by 6. What 1/6 is 25,000, then how much is total? So 25,000 into 6. So total share of capital should be 1,50,000. But when we check total capital, that is become 80,000. That is already given 44 plus 36 plus 25,000, 1,05,000. but actual capital is 1,50,000. It means 45,000 is nothing but goodwill. It is called hidden goodwill, right? We'll come on that point, don't worry. Furniture is to be written down by 870 and inventory to be depreciated by 5%. A provision is required for trade receivable at the rate of 5% for bad debtors. A provision would also be made for outstanding wages for 1,560. Okay. The value of building having appreciated by bought up to 29,200 and value of investment is increased by 450. So these are the revaluation part, nothing special. It is found that the trade payable includes sum of 1400 which is not to be paid off. So means this is trade payable which is also revalued. So 1400 is profit because now no need to pay. Prepare the following revaluation account, partners capital account. That's all. They are not asked the balance sheet. But we will prepare balance sheet also so that account will tally and we understand the proper concept, right? So here they had asked the proper ledger, and this thing also asked in the CA Foundation as well as CA IPCC, right? Let's do the sum. Answer to question number 5, right? No, 3. Page number is 8.56. 3. 8.56. Right? So what we do? First we write revaluation account. There is no memorandum revaluation, huh? Only revaluation. Sorry. Then partners capital account. There are 3 partners, 2 existing, 1 new. Then balance sheet after admission. Okay. Let's put the information first. First capital balance 4436 we transfer, right? There is no ledger, so capital balance we transfer. Particular A, B and C partner and C, right? 4436. This is the balance, right? We write balance brought down. Clear? Yes. Now partners capital account balance we get transfer. Now what to do? Next adjustment. C admit 16 share and 25,000 you bring as capital. So we write by bank 25,000. Also immediately either prepare bank account or make the balance sheet. Bank account where bank account existing balance is 15,500, where you add 25,000 which is bringing by cash. So 40,500 is the balance. Is it clear? Next, the new profit sharing ratio of ABC will be 3:2:1. So new profit sharing ratio will help when it comes in the any goodwill and anything. Now C unable to bring his cash for his goodwill but adjusted through capital. For that C profit and capital contribution made him a firm. Listen again. C is unable to bring third adjustment. C is unable to bring sorry. In case for his share of goodwill, they decided to calculate goodwill on the basis of C's share in the profit and the capital contribution made by him to the firm, right? So So for that, we make the one hidden goodwill adjustment. Working note number 1. Calculation of hidden goodwill and its treatment. Okay. Total share of profit of new partner is how much? 16, and he shipped 25. He bringing 25,000, right? 16. He bringing 25,000 as cash. You are agree? Yes. Therefore, total capital should be 25,000 into 6. That is 3 lakhs. No. Into 6, 150. How much will be total capital? 1,50,000. But actual total capital are A, B. A capital is 44,000. We have written balance brought down. Right? B capital is 36,000. And C capital is 25,000, which is given. So overall age 44 plus 36 plus 25. It is 1,05,000. Right? $1,05,000. Therefore, hidden goodwill should be 45,000. So 45,000 is hidden goodwill, which we have to now make the treatment. So now statement showing treatment of goodwill. First we had calculated the hidden goodwill, then we start the treatment. Same way like we had did before, ABC, 3 partner. First, goodwill raised, that is credit, in old PSR, that is 3:2. So 45,000, old PSR is given in the question, 3:2, right? So 45,000 divided by 5 into 2, divided by 5 into 3 and into 2, 27,000 into 2, 18,000, right? Then goodwill written off, that is debit, in new PSR, that is 3:2:1, 3:2:1, right? So how to write off? So that is 45,000 into 3/6. So 45,000 divided by 6 into 3, 22,500 into 2, 15,000 into 1, 7,500. This is credit, this is debit. Therefore net credit 4,500, 3,000 credit, and credit is nil, 7,500 entire is debit on. Right? So NT will be C capital account debit to A capital account to B capital account. Is it clear? 7,500, sorry, 4,500 and 3,000. Okay, so let's provide the effect of this entry. First we had calculated the hidden goodwill, then we had passed the entry for the same. 4,500, 3,000. So by C capital 500, 3,000. 2 A capital 4500. 2 B capital 3,000. Like this, it becomes 7,500 debit side of C, and credit side of A and B is 4,500 and 3,000 respectively. Right? Now, next, goodwill is done. Furniture, these are the valuation parts. So furniture is to be written down by 870. Inventory to be debited by 5%. Right? So furniture, so debit side, all are debit side item. So we write the valuation account to furniture 870, to inventory. Inventory is 10%, you say, right? So 10% of inventory is 21,400 multiplied by 10%, 5%, not 10%, 5%. So it's become 21,400 into 5%, right? 21,400 into 5%. 107. Perfect. Then 2 coins required for trade receivable is 5% for bad debts, right? Provision is required for trade receivable is 5% for bad debts. So 2 provision for bad debts, 5% on trade receivable, right? How much trade receivable? Trade receivable is 35,000. Out of that, provision 200 already there. So we'll make on 35,000 and less 200. 35,000 multiplied by 5%, it's become 1750. Less 200 already there. So 1550 should be trade receivable provision. Right? Next, the provision would be also made on the outstanding wages for 1560. There is outstanding wages which is going to be arise in the future. So outstanding wages 1560, right? 1560. The value of building having appreciated be bought up to 29,200, right? So the value of building is value 29,200. Appreciate be brought up to 29,200 means building is 26,000, it's now 29,200. That is 3,200 is increase, right? So we write building 3,200, 29,200 minus 26,000, right? Okay, the value of the investment is increased by 450. So investment also increased. So by investment increased by how much? 450, right? Yes. Clear? Everything is done. Next, one more thing. It is found that the trade payable includes sum of 1,400 which is not need to pay. So this is our profit. So trade payable reduced by 1,400. So we also write the balance sheet item so that immediately everything is done, right? So in balance sheet, what we have to write? All these things we have to provide the effect, right? So building is 29,200. 29,200. Trade receivable 35,000 less provision 5%. Instead of previously it is 200 only, but now 1350. So 33,250 trade payable, trade receivable, right? Next, further furniture 5800. They had mentioned furniture written by 870. So 5800 minus 870. 5800 minus 870. This is for furniture. how much? 4,930. Next, inventory deficit by 5%, so inventory is 21,400. minus 5%. $1070, right? Yes, minus कर देंगे 20,330, right? Next, the value of investment is increased by 450. Provision required for the trade payable, trade receivable हो गया 5%. The provision would also made to outstanding wages 1560. So outstanding wages we should write in the balance sheet 1560. That we are written in the evaluation also, right? Fair. Next item. H, the value of building appreciate 29,200 we are written. The value of the investment increased by 450. So investment 2500 plus 450, right? Investment 2500 plus 450. 295. Okay. Then it is found that the trade payable included a sum of 1400 which is not to paid off. So trade payable also reduced by 1400. How much total trade payable? Is 17,000, right? Minus 1400. Wait. What's happened? Wait. Papa lecture is going on. Yes. It's very heavy raining. So after refund, it's become 17,000. 17,000 minus 1400, which is not need to pay, 15,600. Right? Found that trade payable include 1400. That's it done, right? Remaining item can write as it is. Bank overdraft 9,000. Right? Bank OD 9,000. Same. Building is done. Furniture, inventory done. Trade receivable done. Investment done. And cash we had return already, right? Investment also done. And cash we are written here only. Bank already, right? So now revaluation effect is done. The effect on balance sheet of revaluation is also done. Now take the total of this part and get the revaluation profit or loss, whatever. I think this time also profit. Yes, 3,200 plus 450 plus 1,400. 50. Right. Less 870, less 1070, less 1550, less 1560. So zero profit, no profit, no loss, right? 870 plus 1070, 1550 plus 1560. Yes, no profit, no loss. So no profit, no loss. Very nice. Now balance carry down of capital so that we get the capital balance, then close the balance sheet, so account will be tally. 48,500, 48,500, 48,500, 39,000, 39,000, right? Balance is 39. Then 25,000. Out of this 25,000, 7,500 will be reduced. So less 7,500 is come to 17,500. Okay. So now balance sheet, transfer the capital balance. A, B, and C. 48,500, 39,000, and 17,500. How much total? $1,05,000. So now please take the total of balance sheet. It must be tally. Plus 1,560 plus 15,600 plus 9,000. 31,160. Now 40,500 plus 29,200 plus 33,250 plus 4,930 plus 20,330 plus 2,950. 1,31,160. 1,31,160. Okay. So this is hidden goodwill as well as the revaluation normal part. Okay. So that is also we are complete. Let's check the answer. Total of balance sheet is 131,160. Revaluation no profit, no loss. Account is tally. Partners capital account 48,500, 39,000, 17,500. And balance sheet they had not made because they had not asked, right? And goodwill effect is 4,500 and 3,000 and 4,500 and 3,000 that we had done, right? Okay, so this is also done. Now, reserve in the balance sheet. If reserve given in the balance sheet, it will be distributed to old partner in the old PSR, right? So question 4, I think related to that. Let's read the question 4. Dalal, Banerjee and Malik are partners in the firm sharing profit and loss in the ratio of 2:1. Their balance sheet as on 31st March 2016 is as below. Okay. Trade payable, outstanding liability, general ledger. This general ledger need to distribute among old partner because it's a old profit. This should be given to old partners, right? Then Mr. Capital, Dalal, Banerjee and Malik. Okay. Then land, building, furniture, inventory, trade receivable, cash in hand and cash in bank. Okay. The partner have agreed to take Mr. Mistry. Before we have 3 partners, now we had entered one more partner, Mr. Mistry, as a partner with effect from 1st April 2016. That is just one day after the balance sheet date. On that following terms, Mr. Mistry shall bring 5,000 towards his capital. Okay. No problem, nothing special. The value of the inventory should be increased by 2,500 and furniture should be depreciated by 10%. No problem. Reserve for doubtful debts. Debts should be provided at 10% of the trade receivable. No problem. The value of land and building should be enhanced by 20% and value of goodwill is fixed 15,000. Okay. The value of land and building should be enhanced by 20%. Means it should be enhanced means increase kar dena hai by 20%. And the value of the goodwill be fixed at 15,000. So goodwill is 15,000 fixed. The value of the goodwill is be fixed 15,000. Okay, they are written 2 times. Next, general ledger will be transferred to partners capital account. Just simply generally we have to transfer as by general ledger in the capital account be transferred to partners, old partners in the old PSR, right? The new profit sharing ratio will be Mr. Dalal 5 by 15, Mr. Banerjee 5 by 15, Mr. Malik 3 by 15, and Mr. Mistry 2 by 15. Okay. The outstanding liabilities, including 1,000 due to Mr. Sen, which has been paid by Mr. Dalal. Necessary entry was not made in the books. Okay. So the liability is paid by one of the partner. Mr. Sen is whom? Mr. Sen is some third party, but it is paid by Mr. Dalal. So once liability is paid by any partner, so entry will be that liability account debit to partner capital account. So liability will reduce, but it's not revaluation. It's a payment which is mistake, which we had not recorded. So now what entry we should pass? We should pass liability account debit to Dalal capital. Liability will reduce by 1,000 and Dalal capital will increase by 1,000. Okay, prepare revaluation account, capital account of partners, balance sheet of the firm after admission of Mr. Mistry. So I think it's very easy. Nothing is special. Only generally it is given that can be distributed like partners capital account, and you can transfer in credit side of the partners capital account in the old PSR. Remaining is as usual, right? So you can do easily. Next question. Old ratio, new ratio, both are given. This is given calculation of the profit, new profit sharing ratio. We had already calculated, right? So nothing special. PSR, we had already learned how to calculate new PSR, right? These are just examples to explain, but we had did the practical sum and we had taken example as well. So there is no problem at all. Now, anything else? New thing? Admission. Question 5. A and B are partners sharing profit and loss in the ratio 3:2. That is going from beginning. They are take C as a new partner. Calculate the new profit sharing ratio. C purchase 1/10 share from A. Okay. Means C is the new partner whose share is not mentioned, so its share is 1/10, which is purchased from A. So directly we can calculate the new ratio. That is for C, only A will get, right? So we can do. We can write. Question number 5. Question number 4 is homework. We should mention this also. Question number 4 is very simple. Do in homework, right? We had read it, but you have to do in the homework. Question number 5. So answer to question number 5. How to do? A and B are partners sharing profit and loss in the ratio 1, right? So we write old PSR of A and B is 3:2. It is also hang. Okay. Question number 5. So old PSR is 3:2 of A and B. Okay. Then new partner C. New partner C. Wait, I will just put the battery. New partner C admit, right? For how much share? So first case, C purchased 1/10 share from A. So 1/10 share sacrificed by A, right? Therefore new ratio A old ratio is 3.5 less 1 upon 10 for C. So it's come 30 minus 5 upon 50. Right? B share 2 upon 5 into 10 by 10. So it's become 20 upon 50. Why 10 by 10? Because you want to make 50 in denominator, right? And C 110 into 5 upon 5. So it's become 5 upon 50. So new ratio will be 25 raised to 20 raised to 5 or 5 raised to 4 raised to or 5 raised to 4 raised to 1, right? So first case 5, 4, 1. You can see. Next, A and B agree to sacrifice 1/10 share to C in the ratio of 2 raised to 3. Means they sacrifice in old PSR, not old PSR, 2 raised to 3, not 3 raised to 2, right? So second case, if A and B sacrifice in, if A and B sacrifice in 2 raised to 3, right? So what the new ratio? A sacrifice 1/10 into 2 by 5, that is 2 upon 50. B sacrifice 1/10 into 3 by 5, that is 3 by 50. Therefore, new ratio, old ratio minus new ratio, sorry, minus sacrificing ratio. You give the new ratio, right? Minus sacrificing ratio. Old ratio is 3 by 5 minus 2 by 50. How much? 150 minus 10 upon 250, right? 160 upon 250 for A. For B, 2 by 5 minus 3 by 50 comes to 100 minus 15 upon 250, 85 upon 250. C have fixed 110 into 250 we have to make, so 25 multiplied by 25. So 25 upon 250. Therefore, new ratio will be 160 raised to 85 raised to 25. Or we can divide by 5. So 5 3 is 15. 5 2 is 10, right? 5 3 is 15, 5 2 is 10. Then this is 5 1 is 5, 5 7 is 35. This is 5 5 is 25. So 32 raised to 17 raised to 5. 32 raised to 17 raised to 5. See the answer. 28 17 5. This is 160 only divided by 5. 32 only. We can check total 160 plus 85 plus 25. It's 270. It's wrong. It's not 160, it's 140 because we have to less 10. We had added 10. Understood? In 150 minus 10 is 140, not 160. So it's 140 only. 140 divided by 5. This comes 28. Even we can use 140 raised to 85 raised to 25 also, or we can divide by 5 in all, right? And be very careful while making small mistake, like 150 minus 10. We should write 140, not 160. And that is cross-check. By 140 plus 85 plus 25 must be 250. So you can cross-check also. Don't worry, right? Now, next. What the third part they had asked? Simply get 1/10 of share of profit. Means no mention who will sacrifice. That means we sacrifice in the old PSR, right? So in this case, what we do? In third case, let's sacrifice by old partner in old PSR. Okay, therefore, total share we assume 1 C share 110, therefore balance share 1 minus 110, 910. Sorry kids. Right, so now 910 will be distributed among A and B. 3 by 5 into 9 by 10, 2 by 5 into 9 by 10, and C is 110. Let's see, 9 3 ja 27 upon 50, 9 2 ja 18 upon 50, and we want to make 50, then multiply 5 upon 5, that is 5 upon 50. New ratio is 27 raised to 18 raised to 5. Total must be 50. You can check 27 plus 18, 45 plus 5, 50. Right? So third answer is 27 raised to 18 raised to 50. Okay? So this is new ratio. Now friends, remaining part we'll do in the next lecture tomorrow, same time, that is 10 a.m. And you just try remaining question, because I think there is some part where proportionate capital also there, so we'll solve proportionate capital part also, right? So all these things, hidden goodwill also there. We had solved the hidden goodwill, but still they had asked a specific question also. So you just try to do some part of this question, right? And the remaining part we'll do in the next lecture. Okay friends, so thank you so much. Any doubt, any question, you can ask. I think there is no question, right? Yes sir. Okay. Yes sir. Yes sir. Yes sir. Yes. कल के लिए सेम टाइम. चलो बढ़िया बात है. फिर सारे लेक्चर प्राइवेट कर देना और कल का सेम टाइम ये पार्टनरशिप कल खत्म कर देंगे, फिर बंद कर देंगे. ठीक है ना, कल लास्ट लेक्चर रखते हैं. अच्छा, तो आज लाइव आउट सेशन रखना है या नहीं रखना? आज लाइव आउट सेशन क्या करेंगे, बनाना हो तो बच्चे आ जाते हैं. अभी आप बोल देना लाइव आउट सेशन में कोई आने वाला हो तो पूछ लो. अदरवाइज क्या करेंगे, क्योंकि लाइव आउट सेशन के लिए यहाँ पे तो बच्चे पूछ सकते हैं ना, मना थोड़ी करते हैं उनको. ठीक है ना. सो कल का लेक्चर खाली आप अनाउंस कर देना, कल लास्ट लेक्चर को पार्टनरशिप विल बी गेट ओवर 100% बाय टुमारो. ओके, आ जाइए. बाय. Sir, I should leave? Okay.
थैंक यू वेरी मच ऑल द स्टूडेंट्स एंड मनोज सर ने बहुत ही अच्छी तरीके से उसको समझाया है एंड टुडे ऑल द लेक्चर्स विल बिकम प्राइवेट एंड रिमूव कर दिए जाएंगे तो जितना जल्दी हो सकते आप ये उतना लाभ उठाओ एंड वी विल कैंसिल इट राइट नाउ थैंक यू मनोज सर एंड टुमारो विल बी द लास्ट सेशन फॉर tomorrow will be the last session at the same time for partnership accounts. Jai Shri Ram.
Yes, sir. Thank you, sir. Yes, sir.
Bye bye.